This is a long-term wealth play, not a quick flip. The biggest gains usually go to those who enter early, stay patient, and understand the cycle before the crowd arrives. Now, here's the question most people ask. What about regular investors? You don't need billions of dollars, insider access, or private deals to participate in this trend. But you do need patience, discipline, and the right approach. There are a few practical ways retail investors position themselves. One option is mining stocks, companies involved in extracting rare earth minerals. These offer high upside, but they also carry higher risk, especially for early-stage projects. Another option is ETFs focused on rare earths, which spread exposure across multiple companies and reduce single-stock risk. You can also look at battery and EV supply chain companies, the businesses that process, transport, and integrate these materials into real products. The key here is diversification. Smart positioning isn't about betting everything on one company or one mineral. It's about spreading risk while staying aligned with the long-term trend. Just as important is what to avoid. Be cautious of hype stocks with flashy headlines, but no production, no revenue, and no clear path forward. If a company is constantly promoting excitement instead of progress, that's a red flag. The goal isn't guessing the next boom, it's positioning before it arrives. Because by the time the boom is obvious, the biggest opportunities are often already gone. No real investment story is complete without talking about risk. And rare earth minerals are no exception. One major challenge is environmental regulation. Mining and processing rare earths can be environmentally complex, and stricter regulations can delay projects or shut them down entirely. Another risk is political instability. Many rare earth deposits are located in regions with shifting governments, policy changes, or geopolitical tension that can disrupt operations overnight. There's also commodity price volatility. Prices can rise sharply during supply shortages and fall just as fast when markets adjust or new supply comes online. Then there's the timeline. Rare earth projects take years to move from discovery to production. Delays are common. Permits take time. Infrastructure takes capital. This isn't a space for impatience. That's why experienced investors don't chase certainty. They manage risk. Smart investors respect risk. That's why they survive. Understanding these risks doesn't weaken the opportunity. It strengthens your ability to approach it intelligently. When you step back and look at the big picture, one thing becomes clear. This trend isn't slowing down. It's accelerating. The global push for clean energy is moving faster than most people realize. Governments are committing trillions to electrification, renewable power, and carbon reduction. And none of it works without rare earth minerals. At the same time, demand is exploding in other sectors. Artificial intelligence requires massive data centers, advanced chips, and high-performance magnets. Defense systems rely on rare earths for precision weapons, radar, and aerospace technology. And electric vehicles are moving from niche to mainstream at record speed. All of these industries are competing for the same limited resources, and supply isn't catching up fast enough. That's why timing matters. Not timing the market day to day, but understanding where we are in the long-term cycle. Early awareness leads to better positioning. Better positioning leads to better outcomes. Those who recognize these shifts early don't chase opportunity, they prepare for it.